We welcome on board Sandip Sabharwal as well and find out what he's making of the market right now. Sandeep, hi, good morning. Gotten extremely listless. We were just chatting about it as to how the range on the Nifty is only getting narrower by the day, while the headline number, of course, is not really giving you any reason to complain. Do you sense some sort of fatigue setting in right now in the markets?
Asha, so markets are grappling with the fact that the valuations are high, but they also see monetary easing down the horizon. So I think that's creating a conflicting pull and push in the markets. On the other hand, we are also seeing huge promoter and private equity sales in the market. So that also is increasing supply significantly. In fact, today itself, I was reading the papers in one line itself, almost 10,000 crores of.
We seem to have snapped that line with Sandeep. Just going to get back to him in a second. Of course, the point that he was making was that there is a fair amount of dichotomy in the market right now. And yes, supply, because of the promoter stake sales, has definitely increased a little bit in the market. But we've been talking about stocks. And the kind of buybacks that have now gained popularity as well. While on the other hand, there are those promoters offloading stakes as well via blocks. And they're pretty much on the rise. As many as, in fact, 15 buybacks have been announced post the July budget with a total size of about 1,700 odd crore rupees. In fact, Jinay will join in just a bit from now and give us the details of how sizable buybacks have been, which are the sectors and stocks which have seen the most scaled up ones. He will just join in shortly from now and highlight what really is fueling this particular trend in the market right now. Bunch of other stocks which are going to be in focus. But Kunal, as a trend, are you picking up anything? I mean, you had a one-day move on banks, then later on pharma lapped up. And yesterday, I don't think you could really pick up any sort of sectoral trend, barring a few moves here and there in a telecom or a cement, etc.
Yeah, I think one of the trends which we are picking up is financial services, because that's a pocket where there has been consistent strength right from the likes of Shriram Finance. Chola Finance saw good recovery. You saw the likes of L&T Finance also coming back into a decent recovery mode. M&M Finance, I think, made a fresh multi-week, multi-month high. So I think that HFC, NBFC pocket, I think that's started to look very attractive. Piramal Enterprise, for example, that's a stock which has gone through almost a V-shaped recovery, 15% rise from the last 3-day, 4-day swing low for the stock. So there are a lot many stocks within this space which are looking attractive, and many of these stocks are coming back into a breakout mode. So I believe that that's one pocket where we could really look out for more high quality names in terms of riding the trend. The gold finance names, and that's the other space which I believe is also heading towards a classical breakout. And the two key names over there, Muthoot Finance as well as Manappuram, especially Manappuram Finance, that stock is also at 210 to 15 plus levels where it's closed yesterday. I think that's another space which is looking very attractive.
In fact, Jinay is here with us. Let's try and understand this entire buyback trend as well, which has been in place. Jinay, what is your reading?
Well, yes, so post the new rule, we have seen a very high surge in the buyback announcement by the company. If you just look at the buyback announced recently by the companies, we have AI Engineering, they have announced a buyback of about 500 crores, equating about 1% of the equities. We have the likes of TTK Prestige, Sarah Sanitary Wares, Suprajit Engineering, and many more. Now, why is this increase? Let's us understand. So the new buyback rule announced back in budget was that starting from October 1st, the entire amount received by shareholders from buybacks now will be treated as dividend income and will be taxed according to their respective income slab. Now, what used to happen earlier was with the older buyback rules, the income received on buyback was usually taxed by the hands of a company. So there was no as such charges for the shareholders. But right now there will be the income will be treated as taxed and will be taxed by the shareholders. So now let's look at what was the buyback announced till date in FY 2024. Starting from January until the budget, we had about 10 companies announcing the buyback with the total size of 1,789 crores. But as soon as this rule came in this month itself, in August, we have about 15 to 17 companies announcing their buybacks with the total size of 1,772 crores.
Okay, yes. So the pace of buyback has definitely increased, and that's understandable given the tax changes that we saw in the budget. So everybody is in a hurry to perhaps use the earlier mechanism before that October date trickles in. Sandip Sabharwal, I wanted your view regarding insurance. If you've looked at that one closely, this morning we have a couple of initiations that have happened. Jefferies has actually initiated coverage on Go Digit and they're fairly excited about the opportunity there. In fact, interestingly, Go Digit also held its analyst meet and the street has come back quite positive from that. Of course, Star Health is something which is there in the health side of things as well. What's your view on some of these non-life insurance plays?
The non-life insurance space has been growing decently, especially the growth shown by companies like ICICI Lombard, etc., have been quite strong, and that's also reflected in the stock price movements. Non-life has been doing better than life, and I think vis-a-vis the two spaces, I think that's a better space to be in.
Sandeep, just want to get back to the point that you were making about the dichotomy that is playing out in the market and the kind of push and pull because of which the market seems listless right now.
So essentially, valuations are high but the markets also see that there is a monetary easing cycle around the corner. So I think that's creating push and pull. On top of that, we have huge promoter and private equity sales coming up. Like I was mentioning earlier, nearly 10,000 crores I read in the papers today itself is on offer by various companies, promoters, private equity companies. So the supply has increased so substantially in the market. I think that the absorption of that supply also is keeping the markets lackluster. And that also raises the question why so many promoters, etc., are wanting to cash out at this point of time. So markets are in a zone where there should ideally be some sort of moderation in the markets, but that moderation is not playing out, and that's being used by many insiders, in fact, to sell.
Taken, so that's a view coming in on some of these stocks. But what's your view, Sandeep, on real estate? Today, of course, Citi has gone ahead and increased target price on a whole host of companies, right from a DLF to a Prestige to other companies as well. Do you think the cycle is here to stay and the upswing will continue in the real estate names?
I think real estate cycle is quite strong at this point of time. Most of the new projects, etc., are being lapped up. The only concern we should have is that as RBI tightens liquidity norms, etc., the credit supply will reduce next year. And as credit supply reduces, normally all house purchases, real estate purchases are debt funded. So that could impact demand to some extent. So across the board, I think the current valuations of real estate companies reflect the strong momentum in the near term. So like in general, I don't expect a very big upside across the board in real estate companies from here on. There could be specific companies doing well in specific pocket, but overall, I think the real estate stocks are at pretty high valuations right now.
Sandeep, what are you making of, the news flow around the Adani group? I know, traditionally you've not really been a fan, but, now reports are indicating that the promoters are looking at selling shares worth about almost 30,000 crore rupees. They're looking at, some rebalancing of the portfolio in the listed companies as well. Step in the right direction, you think, immaterial of what the stocks may be doing?
From the promoter perspective, I think it could be a step in the right direction because news flow sometimes is difficult to decipher in this group because sometimes they are buying stakes, sometimes they are selling. So what exactly is happening is tough to understand. But I think over a period of time, there was a lot of news flows on them actually putting in and increasing stakes. So that could have led to some promoter, some leverage at the promoter level. So they could be possibly using this route to deleverage.
Okay, so that's a view coming in, but time now to talk about Dr. Lal as well because the company held the analyst meet and there are some key takeaways that are coming in. Vinny is joining us to talk to us about that. Hi, Vinny.
Hi, good morning. So yes, talking about the key takeaways that have come in, they met with the brokerage firm Citi, where we are seeing that the company actually highlighted they expect the mix to start improving, and especially given that they're seeing an increase in terms of the contribution from Swasthfit, which is their test packages. So yes, that's seeing an increase. They expect that specialized as well as high-end tests that will also start doing well, and which in turn will improve the per patient realization for the company. Other than that, they also expect that they are not going to be, the company said that they will not be taking any price hikes or increasing any prices in the near term. The increased penetration in tier 3, tier 4 cities is going to be their focus area. Their core market is what they'll be focusing on. That's the north and east region, as well as expansion in other markets. But the core focus and the core market area continues to be the same. They said the increased channel penetration, acceptability by doctors as well as patients for Swasthfit is something that will work out well for that brand, as well as overall they're remaining quite confident that the industry will see a good volume growth. And in terms of the irrational pricing discounts or deep discounts that they'd seen previously, with the increase in competition, that's now narrowing down. So that's surely a positive sign that we're keeping an eye out on.
Okay, that's some takeaways coming in from the Dr. Lal management meet. But Sandeep, the diagnostic pocket as well has been doing very well. In fact, much before even the pharma recovery actually began. Anywhere you feel confident of maybe adding to positions or looking at maybe a fresh buy?
So, Dr. Lal, we have been holding for some time. Like we bought in a few months back when the stock went to 2100 level, because the view was that the space seems to be bottoming down in terms of price competitiveness, price competition, and pricing seem to be stabilizing and volumes seem to be coming back. So since then, most of the diagnostic stocks have rallied substantially. Most of them are now at 52-week highs. Although we still continue to hold Dr. Lal, then I think longer term prospects are good. But at these prices, for fresh entry, valuations seem to be a bit excessive.
Okay, so while the prospects are good, you need to be watchful of the valuation as far as Dr. Lal is concerned. TVS Motors, that came out with that new scooter launch yesterday, new Jupiter 110. That's expected to boost the volumes and market share because it's a significant upgrade over old model and peers, but it has come at a similar price, and brokerages have been quite positive. UBS has increased the target price to 3,200. You have JP Morgan, which has gone ahead and upgraded TVS to an overweight now. They've raised the target price by as much as 32%, and that stands at around 3,050 rupees as well. We will play that soundbite with the management that we had with the conversation we had with the TVS management. But before that, let me toss it across to Kunal as well as Nikunj. They're on the wall and discussing how August has been a volatile month for Nifty with significant swings in the market. However, certain sectors have managed to stand out with their relative strength. Take it away, Kunal and Nikunj.
So Nisha, you know what Kunal and me were discussing is that, look, when a correction happens and when markets come back, there are different set of stocks which tend to lead or lag. So there is this very famous, old adage on Wall Street, which is that in stock markets, courses remain the same, but horses they change. And I think this is very aptly visible in the way this entire strong sector movement what Kunal has taken out. So Kunal, first, can you just break it for our viewers? What is the meaning of these bars?
Yeah, I think brilliantly started off, Nikunj. The way we look at is that every correction leads to a change or shift in sector strength or sector dynamics. For example, what happened on the election day, the markets when they fell down, post that the PSU index, they started to get into an underperforming zone. Same thing has happened in this time around in the August correction. So what we've defined is three important change in sectors. One is the strong sectors, which are the sectors which are emerging as strong candidates of a potential turnaround, where the momentum has started. The price action is not moved in sync, but the momentum has started off. That we gauge by the changes in RSI. Here we can see that the banking index, the PSU banking index, and the financial services. These are the three pockets where there has been definite change of momentum, absolute change of momentum with respect to the Nifty. Then the second sector is the dramatic slowdown which has happened in terms of momentum.
Okay, so the point we are trying to essentially make here is that, look, post-election, when the market corrected, PSUs led the market rally.
Correct.
Autos were the leaders. But post this global correction, I think banks and financials are now getting ready. You may not see that in price appreciation, but our viewers may just have to recall perhaps that it is like saying that the plane is on the runway and it has started moving, and it is a matter of time. The law of physics would be at play. When momentum gets generated, they will soon start flying.
Correct.
Right?
So they are on the runway. The road is clear. The path is clear in front of them. It's just that they have to start picking
And
up
monsoons
speed.
are also getting over, so there is no problem of dark clouds here. So that's the point, Aisha, Anisha, Kunal is making a point that, folks, I'll say that line again, courses remain the same, but the horses change. So the course for the market is that it is headed higher, but the contribution this time will come from financials and some of the underperforming sectors. And, this entire financial engine plane now is on the runway and it is ready to take off.
Oh, yeah, absolutely. It seems to be the case. And thanks for highlighting those trends in the market right now. But a bunch of other stocks which are going to be in focus. We've been flagging off what's happening, of course, with the cool off that one is seeing in some of the defense as well as the railway names. Other than that, you may also want to look out for an SBI Live, given the kind of move that we've been seeing, especially in the life insurance plays of late. Now they've got a tax and interest penalty demand. It's not a very big amount, but nonetheless equating to about 240 odd crore rupees. There's Nykaa as well, wherein the chatter on the street is that there could be a stake sale likely and a block deal happening to the tune of about almost 1.5% or so. So look out for what that stock as well does. And then, of course, order wins for some of these railway companies actually continues. And today, too, you've got RailTel, which is bagged an order worth about almost 53 odd crore rupees. So look out for some of these stocks. Sandip, just wanted to understand, within this entire new age tech space, I mean, be it a Zomato, be it Paytm, of course, there's news flow as well, wherein Zomato has now picked up their ticketing business, Paytm's that is. Then we've seen how Ola has moved ever since its listing. Anything that's looking interesting to you, or are you wary of the kind of valuations and the run-up some of these stocks have seen?
I think all these stocks got listed, then they're disappointed, and now we've seen a big upsurge. So it was obviously led by Zomato as Zomato turned around. So there was an expectation that most of the other companies will also turn around. But the results from most of the other ones, except Policy Bazaar, have been faltering. So Paytm has its own issues. Nykaa, people have been expecting profitability to improve, but it has not happened at the pace at which it was expected. So I think we cannot put the entire basket of stocks in a single category as they were done at the time of listing. So I think now markets are responding to fundamental performance of most of these companies.
Sandeep, we were just fleetingly discussing that while it is exciting to talk about capex, it is exciting to talk about capital goods stocks, but the data is indicating that numbers are not matching up to expectations. Siemens for 2 or 3 quarters now has disappointed. Thermax, despite the promise, has not really lived up to what markets are hoping from it. L&T also becoming slightly puffy-duffy. There is evidence on a macro basis which is also indicating that private sector capex is not picking up. So are we running into perhaps what could be called as a rough patch for some of the capital goods stocks?
Yeah, so I think like most sectors where there is a significant run-up, this sector also needs to go through a phase of consolidation. If you look at the performance of most of these stocks this year has been very significant. So some moderation on bad results, expected slowdown, etc. in the near term is likely and is happening and the sector is underperforming. Longer term trends, I wouldn't be so concerned because many investments in automation or green energy, the entire power sector, so even the industrial capex and the need for water treatment, etc. So there are so many opportunities that is there that longer term prospects are still good. So it's a phase of consolidation. There could be some corrections also, but I'm not so concerned long term.
Now the poster boys, defense, railways, shipyard. all of them have been multi-baggers. From 2025, 10, 15, X returns is something which in a sense is a normal return. Now this year also HL is up 70%. 2020, do you remember the rate? It actually went below its issue price. And the issue just did not sail through. It's not like it's a very recent issue. It is not like once upon a time listed. It is not like, SAIL or BHEL, but it actually went below the issue price.
And I remember there was once an issue where the company wasn't even able to pay their salaries on time to their employees for HAL. There was at one point of time that kind of cash flow situation which was
They're coming back, so they were able to raise guarantees. But
but I'm just saying that the cash flow from operations had dipped to that level because of just the chunky orders and the lumpy orders they had in hand. But yes, from there, it's been a complete turnaround.
Yeah, but Anisha, the point you could ask yourself is the bull market over in some of these stocks? And if the bull market is not over in some of these stocks, then after the recent decline, like a 5,600 rupee HL has become 4,700. Similar numbers would be attributed in percentage to the other Kochi shipyard and others also. Is the bull market over is point one? And if the bull market is not over, then are these great entry points? Because in a bull market leader, you will not get more than 25-30% correction. So Sandeep, question number one, is the bull market over in some of these PSUs? And if it is not over, then maybe this is the best time to buy them. When Sandeep gets speechless, I know that he's really thinking hard about this question.
So I think that it's sector by sector. So from many of the railway companies, I think we have now growth concerns after the sharp run-up. So I think that's where we need to be more concerned about. We need to be less concerned about the defense plays because longer-term order prospects, etc., still remain very strong. And even for shipyards, like from whatever I've heard on the management conference call, etc., post results, the order flows, etc., continue to be quite strong. So it's just that they have had such a sharp run up, the valuations have gone totally out of whack, whether it's what the earnings are at this point of time, that the corrective move is playing out. And the retail participation obviously is very, very huge in most of these sectors. So there could be some more correction going forward. And at that point of time, I think from defense and shipyards, we could actually find some opportunity.
Is the bull market over, or this is like a bull market correction?
I think it's a bull market correction for many of these names. The correction could probably extend depending on the way these stocks have risen. So, for example, stocks like BEL, they've been relatively more or less in line with the beta for the entire sector, not very high beta in terms of the price uptake. The likes of Mascot, Dow, Cochin Shipyard, etc. These stocks were the ones which had risen exceptionally high in terms of pace, momentum, as well as the price appreciation. So I probably believe that it would depend on how these stocks have risen up higher. I would go back into the same space where railway stocks, for example, 2 years back, 2022 second half, I think these stocks had seen such a kind of a very strong steep rise. Post that, there was almost a 6 month to 8 month of price correction consolidation for these stocks before these stocks made a very strong comeback and to break past about the previous highs. I would probably believe that we are in that phase of a potentially a 3 to 6 month correction. Couple of months have already played out.
Okay. Viresh, same question. Is the bull market over in defense, railways, shipyards?
So the one part which we tend to forget is it's not just about bull market and bear market. There are long periods of sideways consolidation in names which have done really well. And we've seen this cycle by cycle, say whether it was pharma in 2015, once it topped out, it remained sideways for 3-5 years. Then you had Eicher Motors, for example, or a Symphony. So which is where the moves have been justified by earnings. The valuations go out of whack. And then because there has been earnings continued, the valuations just keep catching up, the PE keeps going lower, but the stock prices don't go any higher. So my assumption would be that a lot of these names in the railway basket, defense basket, may not end up falling 50-80% as such, which happens in a terrible case of a full bull market getting over. But we could get into a 1 to 3 year period wherein the stock prices remain in a band of say 20-30%. Say the stock has say fallen from 100 to 70, it will remain between 70 to 100 for a period of 2 years. And that is what the possibility looks in the whole sector as such.
Okay, point taken. So that was a discussion about some of the PSU names, etc., that are going to be in focus, and they have been in focus of late as well. We were discussing the real estate pack and the insurance companies as well as TVS. In fact, for TVS, as I was pointing out, UBS has increased the target price to 3,200 rupees, and there's an upgrade that has come in from JP Morgan as well. They've raised the target by 32% to 3,050 right now. We did speak with the management of TVS Motors earlier. Let's hear out a slice of that conversation.
See, we are looking at very clearly the current Jupiter customer segment where most of the people are commuting customers. And as we see as Jupiter from 2013, the age group has been coming down. So initially it started at 30, now less than 30. And we are extremely happy that we have more than 6.5 million customers in Jupiter. And this new next gen platform, what we have completely designed and developed, it has got completely new, unparalleled design, performance, comfort, and convenience. And this is definitely going to give customer a high delight because it has got more than 15 features which are first in class, starting from innovative iGo assist with 10% more mileage, fully digital console, LED headlamps, infinity lamps, front fuel fill, and as you know, the double helmet space, emergency brake warning, distance to empty, plenty. These are all first in segment. And very clearly, it gives an engine which is lightweight, with compact and body balance technology 2.0. So I can keep repeating the kind of features, technology, what we have.
Okay. Sandeep, the auto dispatch numbers, at least the channel checks are indicating, is not, it's not that impressive. Discounts are kicking in. Earlier you had to wait for months, now you have to wait for days. And if you are really looking at buying a car or a two-wheeler, the shortage has gone through. What implications do you think this will have on auto stocks in the near term? Because these stocks, in a sense, is a lot about psychology and a lot about on-ground demand.
Yeah, so I think we've seen the effect of that already in the stock, some of the stock prices which have corrected. And I think near term, again, till the start of the festival season, we could see this phase of consolidation. But directionally, I think the consumer demand for autos in India, in a scenario where inflation would be lower and liquidity could potentially improve, and the cost pressures for these companies are very, very moderate, is not very bad. I think there was a sharp run up. There is a phase of consolidation now, and we would see that if this consolidation leads to some more correction, then stocks like M&M, Maruti, or even in two-wheelers, stocks like Bajaj Auto, etc., they are strategically doing very well. So it's only a question of when they again start performing.
Okay. Nifty is all set to show, all set to open with a gap up start. Sensex is also looking strong. The turn in some of the financials is evident. The downtick in some of the defense and railway stocks, I think, is evident. But globally, I think what is important here is that most of the markets have retraced what they've done. But Reliance Industries, AGM, and ahead of AGM, there's always excitement. Let's look at that data. How AGM, unlike a lot of companies, Reliance, I think, Sandeep, must be the only company where the AGM is actually used as a forum to make big bang announcements. If I read financial history, Sandeep, Patal Ganga expansion was announced in one of the AGMs. Bonus issues have been rewarded to shareholders. Geo launch, gas discovery, launch of retail businesses, launch of Geo hardware. Reliance family historically, or Ambani family historically, has used their AGM to make big bang announcements, which is very unlike than what other corporates do.
That's true. So I think this is one of the only AGM which is sort of spoken of so much. Other AGMs come and go. So, and every AGM, people expect that they will announce some demerger of the various businesses, IPOs, etc., which doesn't come through. So I think that's the key to watch whether anything on that comes through this time.
Do you think Reliance on a standalone basis now is offering value, because the retail business now in some of parts is actually higher than their Geo business and even higher than the old economy business, and retail is actually growing for them. So do you think now if somebody is looking at a stock which offers large cap, which is large cap and offers value, could it be Reliance for rest of the year or next 12 months?
I think it's all about capex intensity. Their capex intensity doesn't go down, so they keep on doing so much capital expenditure that equity value is not generated the way it should, despite some of the businesses like I think Geo as a business will show improved profitability. Retail will again come back. The oil and gas business is cyclical, so nothing great expected there. But then now they're getting into new businesses like solar. They're talking about huge investments in other new energy businesses. So I think that keeps the ROE down. So while valuations are up at, I would think, exact valuations I don't remember, but valuations are up, but ROE for Reliance continues to be very low at around 10-11%.
Okay, Sandeep, on that note, we'll let you go. RIL, yes, CapEx is something that keeps a return, a bit limited, but let's see what they have to offer in the AGM later next week.
If you like this video, then like, share and subscribe to ET Now.